Well, good afternoon. We are in the process of transitioning to slides. Yes, yes, yes. Tell somebody to join us as we are getting ready to start. I am Shateka Husser. I am your favorite retirement consultant coming to you all the way right now from Charleston, South Carolina area. And I wanted to get on here tonight because it is Annuity Awareness Month. And so, of course, every Wednesday, 8:30 p.m. Eastern Standard Time, we are going live to make sure that we cover something about annuities. Tonight, we're going to do a quick presentation, kind of show you, I should say, reintroduce you to who we are, or if you don't know who we are because you're new to this channel, I want to be able to make sure you are clear on what it is that we are able to provide you. And so we're bringing up the slides now. I'm going to make sure I look at the chat, make sure I can stay in contact with you guys as well as you are joining. I am coming live on all social media as well, but they won't be able to see the slides unless they come on YouTube to see the slides. And yeah, so anyway, I am Shateka Husser. I am definitely from Charleston, South Carolina, born and raised. And I was an Army officer, as you can see with that picture behind me. And I went on to do some great things with corporate, with two multi-billion-dollar corporations as a high-level leader. And one thing I realized is that I did not understand how money worked. So I wanted to make sure that not only my clients at the time when I was an executive coach, but my family and friends, I wanted to make sure that I provide them with some information on how it is that they can win in wealth, because it's not, the family that we're born in, that's fine if it's one of poverty. Maybe you were born, in a wealthy family. It doesn't matter. The outcomes of your family belongs to you and the decisions that you make. And so I realized at a young age, at 17 years old, when I, decided to move on with my life into, the college lifestyle, graduated early from college and went on to do my studies. I realized that, I had to take my future in my own hands in terms of my finances. And so I did the best that I knew how with, the different corporations that I work with and everything. But what I didn't understand was how money worked. And even though I had financial advisors as early as the age of 22 going on 23, they did not teach me how money works. So my goal is to be that advisor that's going to teach you how money work as well, as help you make an informed decision, because it's not enough to make decisions and not have peace about it. It's just not a good deal. And so knowing what I know today, I realized the disservice that my financial advisors, plural, because every time I changed the duty station, I pretty much upgraded or changed my advisors. They just didn't do me the service that I needed in terms of how to understand money. They just told me, that they had my money, right? And some people, they're okay with that. But what I didn't know is that they wasn't helping me with my taxes, right? They wasn't helping me with tax strategy. Just the number one thing that I now help people with in terms of how to make sure that their money is growing tax-free, as well as making sure that they can keep more money. Not that I'm a tax advisor by any means, right? Like I'm somewhat a tax advisor because I'm not a tax preparer, but I know how to help you position your money to make sure that you can get tax-free growth on your money and keep more of your money and have more money in retirement as a result of that, as well as less fees and a whole lot of other benefits that just wasn't provided by any brokerage, and still is not provided by any brokerage account. And so that's where I come in at today to help you understand how money works, right? So I am pulling up the slide. I had a little bit of a fluke here. So if you could give me a little bit of grace here today, because I had someone at my door last minute, uninvited, and I still don't know who that was because I didn't get there fast enough, but kind of threw me off course because I am like peeping around because I'm home by myself, and people are crazy out here today. So anyway, I am excited to tell you that you can win no matter what you have going on right now, as long as you have the right information, right? So the average person does not have the right information to be able to make the right decisions. And so, unfortunately, that keeps them bound in a cycle of, feeling like they have, not enough money, living check to check, always having a hole in their pocket, so to speak, if that makes sense. And so, if they could understand, which I bet I understand at a greater level, then they could, really do a whole lot more with, winning in wealth. And that's what I'm all about today. Now, I am not your personal finance person by no means. That's not the level that I'm on. I will refer you out to some people that can help you with that. There's a lot of great nonprofits out here that are helping. Locally in Charleston, I know the I Hope Center. I mean, they are definitely doing a great job in Charleston, helping people with personal finances and things of that nature. And even business owners, with the basics. Where I come in at is the gap, and as soon as I can find these slides, because they just kind of like hid from me. The gap is really where I come in at. I help you identify your gaps so that you can fill them with money, and I can help you find money, and I can help you use your money twice and three times and four times. That's primarily where I come in at. That's the difference between I'm a strategist all day long. I can take, I don't know if you are familiar with the biblical term, 5 fish and 2 loaves. That's kind of what I help people do with their money. But I only want to work with people that are disciplined to do that because, it's a discipline. It really is a discipline. If that's what you're working with. And if you got plenty of money, I can work with people, of course, because I, was one that was in the top 2% of earners at one point when I was working in corporate. I actually could work with that level of person, right? And I can work with the person that doesn't have enough and they're living check to check. So I don't discriminate by class, right? But I'll tell you that my target person is going to be a government employee, veteran, a career professional. Why? Because that's primarily who I was, right? Before becoming a full-time business owner. And I still work with business owners. I can help with SEP IRAs and those types of things. But those are just some of the people that I primarily work with in this career professionals and business owners. Shame on me because this slide is like, the presentation is like definitely not where I saved it. So give me another minute, please. Let's see. Definitely ask your questions as you watch this replay. If I cover something that doesn't necessarily, you don't really understand, you can simply just make a comment on a YouTube, all day long. It lets us know when somebody makes a comment on there, and I can help you the best that I with that, because I want to make sure that everything is clear on here. And your feedback, your immediate feedback is exactly what we need to make sure that we're getting the right information out. Whatever questions you have, we can answer that, as a community as well. I'm fine with that, because, I'm going to get you the right information. I'm confident that I can do that. All right, I found it, yeah, guys. It only took me about 5 minutes. All right, so we're here. Okay, let me close it so that I can pull it up. And yeah, so we're like right in time to make sure that we can go over this. All right, so I'm pulling it up. It's loading. It's gonna take about 2 or 3 seconds to load. And so again, it is Annuity Awareness Month. And so with it being Annuity Awareness Month, every June, I want to make sure that I am providing you with the best value possible as it relates to annuities. A lot of people don't know what annuities are, and I often tell people an annuity is basically Social Security. It's like you're buying income in the future. Sometimes people buy a house or they buy real estate. They purchase a real estate portfolio, but they don't necessarily have to if they know how to buy annuities the right way. There are some wrong ways to buy annuities. I have a booklet. I have these nice smart booklets, handy guides that I give to clients that teaches you how to properly, buy annuities and what mistakes not to make and things of that nature. So once you are in our VIP community, you can have access to that same information. I'm going to skip right on through here. Of course, tonight we just want to make sure that we help you position your money for tax-free retirement income with forever distribution. And I'm going to tell you a little bit about who we are. I've already done that. So we're already into the presentation. I'm going to make sure we answer these questions as well. And who we are, again, Husser Financial Solutions, we're definitely based out of Malta, New Jersey. That's our DBA out of Malta, New Jersey. And we provide financial strategies, retirement planning, life insurance, debt solutions to our clients. We can get you out of any type of debt, 7 to 9 years. In 7 to 9 years, we can have it structured, have you out of debt. I don't care if it's your mortgage or student loan or whatever. We have strategies to help you do that as well. We primarily focus on retirement, but that is one of the other services that we provide. Of course, I am personally in 19 states right now, but we have access to all 50 states. So it doesn't matter what state you're in. We can work with you. I'm definitely working with over 25. Well, I should say we have access to over 25 A-rated carriers. We only want to work with the best of the best carriers, the ones with the best products. I am like a scout. I'm always looking to see what the best products are, and there's a lot of tools out here to help me see that in a very quick manner. So right now we'll talk about some annuities, but there you can literally roll over your annuity, your money, and get 25 to 40% immediate income. That's the promo that I've been telling people about this month because people want to make money. Hi, my good friend Venetia. So 25. Think about it: 25 to 40% bump on your employer account. So no matter what type of account it is, as long as it's one of those accounts, or it could be just a lump sum of money you have in your bank account, we will absolutely give you what you need in terms of that 25 to 40% bump immediately for your retirement account. So when you're ready to turn on that income, if you have $100,000 and you decide you want the $25,000 option versus the $40,000 option, no matter what, that's $25,000 more, 25%, or that's $40,000 more, 40%, whenever you decide you want to turn on your lifetime income. For some people, that's significant because they're already behind. They're getting started late, like in their late 40s. And so that's what we come in at to help you play catch up. And that's just one of the products. Of course, we have an index universal life product that works for people that make six figures in terms of a catch-up plan. We call it the 5-year retirement plan because they can literally contribute to that for 5 years and be done with their retirement account and receive a 5-figure amount for the rest of their life, just like Social Security. So they can pretty much, design their own income, right? And most people want to be able to understand what that looks like. So enough about me. You can just take a look at that. Of course, the disclaimer, I'm not giving you any financial advice. I don't know your financial situation. I don't have a needs analysis in front of me to understand what it is that you're doing, right? So I can't give you anything. However, I am giving you facts. I am giving you information and data so you can make a more informed decision or have a better understanding of different types of financial products. As a 26-year experienced multidimensional investor myself, I have dabbled in so many different things. So real estate, trading, stocks, you name it, I've done it pretty much, right? Of course, different types of employer plans I've held and insurance products. So 401k, or IRA, the Roth IRA, all those different types, TSP, I've had all those types of accounts. So I'm very familiar with the various types because I have transitioned to transition. That's why I'm pretty well versed on all of them. So if you retire today, would you be able to maintain your current lifestyle? That's a question you have to ask yourself. Have you saved enough money? And most people will say that they don't know. They don't think so, right? So I've had about 99.9% of people that tell me they had not saved enough money in their retirement account. And that's not a good deal, right? And so look at how to identify the gap. This is where I come in at primarily, right? So I'm going to help you all day long determine your gap. So you see this slide. It is probably the most important slide for you to understand in the entire presentation. And it only took us 15 minutes to get here. I apologize. So annual income needed to retire, right? So you need to figure out how much income you're going to need in retirement. So the average person, this is his average. This might not be you, because I don't know your lifestyle in retirement or your vision for retirement. But anywhere between 60 and 95% of what you make today is what you're going to need in retirement. So if you make $100,000 today, you're going to need anywhere between 60 and $95,000 in retirement. The average person will not be able to get that in Social Security, okay? Because Social Security is only going to give you what of that 100,000? 40%, which is what, 40,000. And you think 60,000, that's 20,000 at a minimum you're going to need to find from somewhere. That is where I come in at. So I help you at your youngest age possible buy income in the future. And that's really what the index annuity is all about. Since we were in Annuities Awareness Month, let me just start all over for the people that are just joining in. This is June. Happy Annuity Awareness Month. And we're going to help you understand how annuities work. Basically, you're buying income for your older self, because you don't know if you'll be able to work as an elderly or someone in their 60s, or so you're going to buy income in the future, right? You're going to take care of your older self today. You're going to start putting away money for that. It could be annuity, it can be other products, but because it's Annuity Awareness Month, we're focusing this entire month every Wednesday at 8:30 p.m. Eastern Standard Time. We are focusing on annuities. All right. And so if you're not on the YouTube, definitely check us out. Check out the replay so you can be able to see all the slides. Shateka Husser, just go ahead and do a search for my name. But annual income needed in retirement is the first thing you have to determine. Then what you're going to do is you're going to subtract your Social Security, as you see, right? What is your Social Security pension? I teach you, how to get that, where to go to get that, all that good stuff. And once you get that number, you subtract that from your annual income. That is your gap. Because people always ask, well, what is the gap? The gap is the additional annual income that you're going to need to supplement your Social Security or your pension, or your Social Security and your pension. So determining rather you have both, right? So what does that number look like? That's where Shateka Husser Financial Solutions primarily come in. That is the number one thing we do, is we help people identify their gap and fill the gap with money. All right. So enough said about that. So as you can see here, this slide doesn't look that great on here because the way this software is built. But basically, the average person wants to have safety of principle. They don't want to lose their money in the market. They're tired of losing their money in the market. They don't want any more risk. In fact, when you are aging, the older you are, the less money you should have. Or I should say the less risk you should have, the less risk you should have in your portfolio. So that's why we often tell people certain products that they need to start moving their money into more so than others, so that they can have a better balanced portfolio with less risk. Because the only reason why we want to lessen your risk is because will you have enough time for the market to return your money in time for retirement, right? Or in your lifetime, right? So that's one of the reasons why we do it. Now, if you still want a lot of risk in, as you're easing into retirement, that is, of course, your choice. But safety of principle is going to give you less, right? It's going to be a fixed product. It's going to be like you see there, about 1 to 4 or 5%. People that buy CDs, they buy a lot of like very low risk items, but that's not really going to help you with retirement. That's not going to give you the amount of income that you really want to need, or you really need. So let's look at the risk of principle, or the upside potential. Most people, they want to have a lot of money. They want that aggressive growth. How do you get that aggressive growth? This is what this slide is saying. You can have the best of both worlds. You can have safety of principle, and you can have aggressive growth, which is upside potential. And that's always going to be that index product that you see there, right? So we're going to go ahead to the next slide. We want to make sure that you enjoy the gains without the risk. And I'm going to tell you this quick tale of two brothers before we go into the annuities, which is really why we're here, right? We're going to get into this annuity a little greater. Brother A believes in the old way, the way that most people believe in, the way that I used to believe, as someone that had, like I said, 401k, TSB, IRA. Brother B believes in the new way, the way that you hear a lot of people talking about. But all things are not created equal. All carriers are not created equal. All IULs are not structured properly. all IULs have to be funded properly. It's a lot of details that a lot of people don't understand. But when I tell you this is where I started in this industry, this is where I started, IULs, before doing anything else. So if I don't know anything, I do know the IUL the most. Okay. So the brother A basically has a 401k like the average person. 95% of people will have a 401k, 403b, 457, TSP, IRA, SEP IRA, Roth IRA. They will have some type of employer plan. 95% of people, right? 5% of people have done their homework. They're more understanding of how money works. They want to make sure that their money is going to make money for them while they're sleeping, compounding, but not have risk, not have to pay taxes, not have to worry about a whole lot of fees, not be susceptible to lawsuits of any kind. So we protect your money those three ways: lawsuits, market volatility, as well as making sure we minimize your taxation, right? Minimize your fees, no taxes if you can do the right thing. So we can eliminate taxes if you do the right thing. It's all in understanding how the money works. So how you do one thing is how you do everything. You got to get clarity on how the money works. And so what we teach is, of course, you don't take out withdrawals if you have, say, an IUL. You would do loans so that you don't have to trigger a taxable event and end up having to pay taxes, right? So brother A, as you can see here, he puts away at $6,500. The employer is matching him at $1,050. He has an annual premium of $680 for his life insurance. We know that that's rented insurance when you work for a corporation. We understand that 30-year term is not going to work for him when he's 65 years old, trying to get insurance and life insurance to say the least, right? So brother B understands that he needs to have an IUL that's going to last him his entire life. So he's age 120 years old. For the same amount of money, he can have a $600,000 IUL, and he can have, that growth with tax-free growth. Okay, that's the key word, tax-free growth. Why is it tax-free? Because it's tax deferred unless you create a taxable event. And we're going to teach you how to not create a taxable event. All right. So after 30 years, you can see here, brother A ends up with, term insurance. He's 65. You know what that would cost him? Like $12,000, right? A year for the same amount of insurance, because he's older, may not be as healthy. And that insurance was rented to him from his corporation. And when he retired, they didn't let him take it with him, right? Cumulative tax savings is $65,000 and total retirement is $858. As you can see, he's slightly above brother B at $709,000. But here's the difference. It's not about how much you make, but how much you keep. So guess what? We're going to fast forward in retirement. And this is why I go hard, everybody. This is why I do what I do every single day. I want to make sure that you don't return to work in your 70s, like a lot of people will end up having to do, because they're out of money. Why are they out of money? Because all you have is all you have if you don't have a pension or Social Security. Even if you have Social Security, it's still not going to cover everything, right? So looking at these numbers, he's going to be out of money in 9 years at $858,000, because by the time he takes his taxes out and he withdraws his money every year to live off of, the $97,000 annual income will only last 9 years. Brother B, on the other hand, will actually have $97,000 in annual income until he passes away. Let's say he dies at the age of 100. He will have lived off of over $3 million. His family would have been left about $3.4 million. So there you go. Which plan makes you feel more financially secure? Everyone's going to say brother B's plan, the IUL, because they understand, even if, let's say, brother B has a heart attack, cancer, stroke, dementia, which we can show you in some other slides, he needs some type of long-term care. He can access his long-term care right out of his IUL, but I happen to deplete his entire retirement account. He can just use his death benefit, because a lot of people say, I don't need a death benefit. I'm young. I'm healthy. I don't have any children. I don't have a husband or a wife. It's just me. What do I need a death benefit for? Well, you can leverage your death benefit for long-term care so you don't deplete your retirement account trying to live, because you need, certain types of medical attention. All right. So that's one thing. And let's say you have a lawsuit of any kind. People are hiding their money in their IULs. If you have a regular account, such as a 401k or, TSP, those types, that whenever you have a lawsuit, they can take those funds from you, right? That's visible to the court. Anything you have inside of a policy is not visible to the court. Okay. So you're protecting your money from all types of angles, right? Let's look at this tax. Do you feel like taxes are going to go up in the future? If you feel like taxes are going to go up in the future, you're probably right? Economists say by 2033, taxes will double. And you can see here that taxes was as high as 91 and 94% between the 1960s and the 1940s. 91 and 94%, and we're at 40% right now. So absolutely, we know it can go up. All right. So let's keep moving. One of the things I want you to consider, if nothing else, of this whole conversation is tax-free options. Have you considered how to have tax advantage planning, how to get in front of it, how to position your money for tax-free growth? Okay. Tax deductible contribution, tax deferred accumulation, or tax-free distribution. You can have two, but you can't have all. That red line that you see is any type of employer plan like we talked about. Okay. 401k, 403b, 457, TSP, IRA, Roth IRA, SEP IRA. That's the red line. That is a mutual fund based product. All of them are mutual fund based, meaning they will have 30 to 50% more fees than an IUL. Okay. And you are susceptible to market volatility. You can lose money. Now you see, this is a W. There was 2 periods where they lost. That this person that had $100,000 lost about over $60,000 twice. It took 8 years for them to get their money back the first time, and it took 5 years the second time for them for the market to return their money to them. So you have to ask yourself, do I have enough time to wait for the market to return my money? All right. That blue line that you see is actually the IUL. What happens when the market crashes and loses, people's shirt 30 and 40 and 50% and 70%. We've seen people during the pandemic, they committed suicide because they said, I'm not going to work for the rest of my life. They were so stressed out. People came to us crying. What am I going to do? They couldn't find their advisor because the advisor has sold them mutual fund based products, okay, like stocks and things of that nature. So the IUL gives you the best of both worlds, because what happens is when the market goes up, as you see on this presentation, your money goes up. But when the market crashes with that red line, which is those mutual fund based products, your money just locks in place, doesn't go anywhere. You don't lose a penny in the market. You can sleep at night. Rest assured, you don't have to worry about losing any money in the market. The only thing you're going to know or understand or experience is a gain. Your money is absolutely going to go up when the market goes up. That's what we're talking about. All right. So the old type of life insurance was a term, whole life, universal variable. The new is the IUL. It's actually not that new, to be honest with you. It's new for a lot of people today. It's been around since 97. So it's been around quite some time. It's 2024. That's what, 27 years. So it's been around for almost 30 years, and people just finding out about it. But either way, living benefits is why people get it, because they want to make sure their long-term care is covered, because they're seeing their aging parents or other people's aging parents have things like dementia, heart attack, cancer, stroke, and they end up needing some type of facility care. And that depletes people's money. People go bankrupt. 69% of bankruptcies are caused by medical challenges that people just don't plan for. But people over 65, 70 to 80% of people over the age of 65 will need long-term care. I'm going to say that again. 70 to 80% of people will need long-term care at age 65 or greater. Okay. So with that being said, do you have a plan for long-term care? So that's where the IUL comes in at as well, right? Tax-free loans, as you can see on here. All right. This IUL is going to last until their age 120. Okay. You can structure it for shorter years, but why do it? Because it's going to still yield you about the same amount of money. Okay. But you can take out loans until infinity. If you put enough money in it and you fund it properly, you can have never ending tax-free income just out of the IUL. We haven't even gotten to the annuity yet. The reason why people like the IUL or the annuity is because they like liquidity. The annuity does not have liquidity until you reach that retirement age, unless you want to experience the penalty. All right, because you have your pre-retirement age penalty. Okay, and then of course you're going to have taxation on the annuity versus this, where you don't have taxes. So if you don't have the health, the annuity is a great option. We're going to move on to that right now. If you don't have great health, then you want to get the annuity, because it's still going to give you a death benefit and all those types of things, right? Let's finish up this IUL with this last slide. As you can see here, people doing private banking, like I mentioned in the very beginning, I don't care what type of debts you have, you can pay all your debt off between 7 and 9 years. I don't care if it's a mortgage, student loan, IRS debt, it can all be structured in your IUL, to be paid off in 7 to 9 years. And oh, by the way, you can still use some of that money even while you're paying off your debt. Your money is working for you. Why? Because you're paying off your debt and your money is growing inside of the IUL at the same time. How does that work, Shateka? You pay $600 a month. You go back, within a week of you, or a month, however you want to do that, of you putting that money in there and going right back and turning around and taking the money right back out and then paying your bill off. Well, the only thing you're doing is funneling your money through an IUL. It's not like you have a total new bill, okay? Because you're funneling your money through the IUL so that you can use your money in two places. You're paying off a policy and you're paying off debt at the same time. Your money is growing and compounding and making money for you while you're sleeping in the IUL at a greater amount than it ever will in the bank account. So that's how you get to pay off debt a little faster. What we have seen is that between 2.9% and upwards of that, 4% or so, even when you have your money in a loan status, you're still going to make about that amount, right? So that's still going to beat what you have inside of a bank account. So why not have it in an IUL? But now you have leverage, you have wealth on sale, because I don't care where you put your money. Like I told someone a couple days ago, $181,000 over your lifetime, and you're going to have a $1.7 million policy. Where do they do that at, right? Like, it's wealth on sale. So I don't know why, we would even be having any type of questions about that. So yeah, so you got your chronic, critical, and terminal illness riders, so you can have access to your death benefit while you're living. This is a death benefit that you don't have to die to use. You can have lifetime income. You can have guaranteed minimums of 1 to 3% if you desire. Cash value. Okay, so there's 6 steps to financial freedom. I often teach people what those 6 steps are. There's no other asset class that you can put your money in and have all 6 steps to financial freedom covered. There's no other asset class but a permanent cash value policy. I told y'all in the beginning that I was a multidimensional investor. I trust cryptocurrency, I own Bitcoin, you name it. I have put my money in everything. But there's no other asset class that you could put your money in and have all 6 steps to financial freedom, which are having cash flow, paying off your debt, having an emergency fund, having your money protected 3 different ways, having preservation of your wealth, having tax-free growth, having a whole legacy plan built for you for the next generation, even, beyond your retirement. There's no other vehicle that you can put your money in that gives you all of that at the same time, but a permanent cash value policy. And I hear people say, oh, it's so expensive, because they don't understand how money works. They don't understand how to use the policy, how you can go in and take the money out and pay your debt off, and so much more. That's another whole class. But let's keep going, because I am well over time. We're supposed to be talking about annuities tonight, but I always like to start with the basics and build and have a foundation. So here we are. All 5 of these, which you can find in a fixed index annuity, right? Accumulation potential, tax deferred growth, a level of protection like we just talked about, even from probate, retirement income, death benefit, all of that you can find in an index annuity. Like I said before, the difference between an index annuity and an IUL is you don't have the liquidity, but you do have aggressive growth, super aggressive growth in some of these products. And like we just talked about in the very beginning, if you're just joining, you can get between 25 and 40% increase on your money, no matter what amounts you have. 25 to 40% immediate bonus on your money when you roll it over with this particular carrier, because that's what they're doing right now. So with it being Annuity and Awareness Month, I wanted to make sure people know what the highest rollover bonus you can receive right now. I haven't seen anything higher than 40%. So that means if you have $100,000, you can get, and this carrier has been around since 1890. They're not going anywhere. They're legit. They have a strong financial backing, right? A-rated carrier. And so that's who's actually doing that for annuities. And it's super exciting because a lot of people need to play catch up with their time, and a lot of people got started late and they just didn't think about it, right? They were living their best life. All right, so now we're going to talk about index annuity, 401ks, IRAs, 403bs. All those are opposite. So what people are doing is they're taking those types of accounts, everything that you see on the left, and they're rolling them into what's called some type of fixed index annuity. Why? Because they want to make sure that they protect their money from market volatility. And so they want to put it in a safe haven, number one. And number two, they realize that their money can still grow just as aggressively inside of one of those type of accounts with less fees, 30 to 50% less fees. In fact, there's a lot of annuities that don't have any fees. The one I just told you, they don't have any fees. So super exciting product to be in, right? So 25 to 40% bonus. Let me get this right. I'm gonna get 25 to 40% bonus on my money. I don't pay any fees. And oh, by the way, if I get sick and need long-term care, my income, once it's turned on, will double for as long as I need it, and while I'm in a long-term care status. My income will double. So if you're getting $20,000 a year, it will double to $40,000 a year because you're in a long-term care status. So index annuities are pretty attractive. They actually are one of the tools we like to use with clients to make sure that they combat inflation, because with inflation being, they're always going to be more competitive. They're always going to compete against inflation. Carriers are going to go against carriers to make sure that they have the best product for inflation purposes. When inflation stops, now is a good time because inflation, right? But when inflation, as it deflates, so do their par rates and those things. You don't understand what a par rate is, but basically it's how the annuity would grow, the multiplier for the annuity growth. And so basically, understanding that, wow, I can have my money in a product that has no fees and combat inflation and gives me long-term care. Okay, but while it's not as liquid as an IUL, you can access 10% on average, depending on what carrier you're going to. Anywhere from 7 to 10% is what I'm primarily seeing, right, as a broker. 10% of your money you can access every year penalty-free, no matter what age you are, from the carrier's perspective, but you will end up paying, taxes if you're under the age of 59 and a half, as long as you report it properly on your taxes, right? And so that's really important to understand. Now, these bonuses, they come in all different sizes, you know what I mean? 7% bonus, 10%. I've seen 30, 25, 23, 40. The highest I've seen is 40% bonus on your money when you roll your money over into an annuity. All right. That's the highest I've seen since I've been in this industry for the past few years, right? Lifetime income benefit rider, it is basically Social Security that you're designing. Instead of you saying, oh, for some of you, you don't have Social Security because you didn't pay any money into it because you may have been an entrepreneur all your life, right? Or a business owner. You didn't really pay anything, so you don't have any Social Security coming. So you need this. You need to buy some income in the future for the future. And so the lifetime income benefit rider is just that. It gives you on top of that 25 to 40% bonus that you're going to receive, you're still going to have that growth, right? So for some, depending on the carrier, 4%, 8.25%. This depends on the carrier. It will determine what kind of growth you will see, right? In addition to your bonus, okay? And then, of course, the well-being rider is there, and then the rollover, starting a new plan. Okay, so basically, those are some of the benefits that you can have when you have the index annuity versus just having a company plan, and all you have is what the company gives you. Yeah. Okay, so I can't emphasize this enough. Long-term care. That's really, so here's what I like to say. Long-term care, liquidity, right? Those two things, all right, you can access more liquidity in an IUL than an annuity, but nonetheless, you'll have some liquidity. Long-term care, but for both of them, right? And you can get a lump sum pay if something happened. Your beneficiary gets a lump sum pay. They both provide a death benefit, right? So you get that your beneficiary will get the death benefit if you don't use all the funds while you're living. All right, so let's keep moving on. But they both will last you your entire life, right? Once it's turned on. So we talked about the bonus, all right? Like I said, it depends on the carrier, but the biggest three concerns or the biggest three problems or solutions that we provide to clients is if you have a loss, you won't have a loss of principal. So we take that away. No more losing money. Okay. Income to retire with. Okay. And you don't have to worry. This is the number one concern people have besides dying is outliving their money. Why? Because people are living longer. Even my grand uncle lived to be 106. I mean, people are living a lot longer. And so if you're going to live long, you better live strong when it comes to your finances. And so your money need to be long. And that's where the annuity comes in at, right? I had a young lady, 74 age, 74 years young. She gave us some money, gave her, a few $100 more for the rest of her life because she was concerned about, the inflation keeps rising. And she's like, my money is, she had hit the lottery and she was running out of money. She said, I need to buy some income so I can lock things in. And so what we do is we have, I'm not going to show that tonight because I'm already well over time. But what we have is we have this tool that we use that we can tell you based on how much money you move, how much income you can expect. Because I had a gentleman, he wants to know how much money he need to move for $3,000 worth of income every month for the rest of his life. Another one, I should say $3,000, $4,000, and $5,000. So I was able to send him, the increments at each one of those levels. Like, for $3,000, of course, is less money, right? That he will have to put up. So a little over $200,000 because he's 47 years old. He wants his income at age 62. So depending on how young or old you are, and depending on when you want to turn the income on, and depending on how much money you have, all these variables will determine what your income is going to be. Nobody's really saying that. Nobody's really telling clients like you can expect to have this income if you put this much in. And of course, these are estimates, but usually they are conservative estimates, which is the carrier always want to err on the side of having not over promising. So they're very conservative. So telling him, 281,000, he probably just needed to do 250, right? But at the end of the day, he's going to get that 3,000 for that amount for someone that's, age 47 years old, wanting to put away money that he can know at age 62, he will have at least $3,000 of income for the rest of his life on top of his, whatever else he has coming in, rather it's, his properties, his Social Security. For some people, that'd be their pension. All you're doing is just buying income for the future, like you did with Social Security. But this time you're in charge of it. The government is not in charge. You're in charge of your money. You're in control. In fact, one of these products is called that, benefit control, because you're in control. You can lock your index. You can lock the rate of, like right now, one of these, they're up to 6%, and it's going to keep climbing. We expect it to go up to above 10%. But they can lock it at 6% if they want, or they can lock it at 9 or 10. They're very flexible. You are in full control of your money. It's just that it's held with the carrier. Who the banks put their money with, or who do corporations put their money with? They're going to put it with a carrier. That's why we have what's called bank-owned life insurance, BOLI, BOLI, or corporate-owned life insurance, COLI, COLI. Okay. So COLI and BOLI, that's why we have Disney World. Disney World will not be here today if they did not have a life insurance policy to pay their employers. They was about to go bankrupt, and they reached inside of their reserves, because who know how to handle reserves better than a carrier? Like I said, this carrier has been around 1890s how old they are. They've been around since 1890. They've withstood every pandemic. When banks have folded, this carrier has still been around. So I want to see what questions are out there. I'm well over time tonight, but I want to see what questions are out there. Make sure I answer your questions. I'm on Instagram. Follow us on, Instagram. We do have a free retirement planning guide. If you go to Shateka.com, you can download the free retirement planning guide. I'll put that banner on here as well. Definitely want you to like, comment, share. Let somebody know that we're here on Wednesday nights this month talking about annuities at 8:30 p.m. Eastern Standard Time. so that you can get in where you fit in, ask your questions. If you watch the replay, you can certainly ask your questions on the replay. We can always answer those there. We're happy to do that. We're very well versed on annuities, and we love talking about annuities. It's probably one of my favorite products just because I like to design incomes and outcomes and give people some guarantees that, stocks and real estate can't give them. As a real estate investor, as a multi-property landlord, there was no guarantees. If a tenant didn't show up, or if they didn't pay, and then they could be squatters. When I was in Baltimore, I could lose, but I can get some guarantees with an IUL, so to speak, right? I can have a lot more security, as well as I can have a whole lot more, definitely with guarantees with the index annuities. Absolutely, very aggressive growth, and I like those bonuses all day long. So what else do we have tonight? I believe that is all we have. I want to make sure. Yeah, that's all we have. I'm gonna move this from the screen. So let me ask you this question. Have you saved enough money? Have you saved enough money? Next week, what I'm going to show you is the design, because we put a lot of work into this. We put a lot. So what I do is we do like a spreadsheet, Google spreadsheet. We show you, all of your different, after you've given us your needs analysis. So the next step is that you would give us your needs analysis. You would set up an appointment with us. Okay. It's just a quick call, compatibility call. So we're clear on expectations. And then we'll go into, and that's like a 10, 15 minute call at the most. And then the next call is going to be, we're going to be looking at your needs analysis to see all of your assets, liabilities, everything that you have going on completely, you and your spouse and your children. And then we'll design a plan. We structure income. We structure plans based off of what you have. Everybody's situation is different. I don't do cookie cutters at all. So it does take a lot of time. And so what we do is we get into the spreadsheet. The spreadsheet is going to show all of your future income, rather that's, Social Security, pension, income from real estate portfolio, whatever. We're going to have all those different columns there. And then we're going to say, you said you needed 8,000 where you're at 6,000. So now we got to find 2,000. So here's where you're going to have to put up X amount of dollars to get you to 2,000 additional income, because like we said before, you're going to need between 60 and 95% of your money. On average, person needs 70% of their income. So whatever you're making today in retirement, you're going to need on average 70% of that income. Okay. Easy math, $100,000, $70,000, what you're going to need. If you only get $40,000 from Social Security and you don't have a pension coming in and you don't have any properties, you got to find $30,000 to live. So now you're going to put away enough money so that you can have your $30,000 worth of income in the future, trying to take care of your older self. That's what we do in a nutshell, right? So if you don't have any questions tonight, that's fine. You watch the replay, definitely put it on YouTube, or you can, set up a 10-minute consult to see if we're compatible. It's not really to go through, your needs analysis. That's not what 10 minutes is going to do. However, we would set up a follow-up call, and we only have a few slots left for the month because we started running ads and we got a lot of people that are starting to knock on our door. And so if you want to get in with us, definitely need to do that ASAP if you're trying to see us this month. It is an index annuity month, and we do have that promo, like I said, going on with the index annuity, where you get anywhere from 25 to 40% immediate bonus on your money when you roll your money over. And so that is in a contract. You can see all of that. And this is what a very reputable carrier that's been around since 1890. They're not going anywhere, and they're going to make sure you taken well care of, right? All right. So I want to make sure that I'm not missing any questions. I'm surprised. I must have did a really good job explaining everything because I don't see any questions. Or maybe you just don't know what to ask because you don't know what you don't know. I've been there as well. All right, so I'm looking all around and I just don't see any questions. All right. Well, I will see y'all next Wednesday night at 8:30 p.m. Eastern Standard Time. I'll have some more slides to be able to show you, get a little deeper in. I want to show you how we structure some incomes next week. So you can kind of see what we've done for quite a few millennials and even some baby boomers, because it's baby boomer season, right? This year is the largest year for baby boomers, okay, in the history. So most people this is the year where the most baby boomers are retiring, okay? And so we're here to help the baby boomers primarily, as well as everyone else getting started, right? So that you can start putting away. You can start as early as 15 days old with a baby, getting them prepared for retirement. They don't have to wait till they're, in their 40s to start preparing. You start putting away $50 a month on a baby, and have them preparing for retirement. I mean, people wait, a lot of times for a lot of things at the last minute, and they put their money in areas that this really is not serving them. And so we want to help you to reposition your mindset and then your money so that you can have a really nice, comfortable, peaceful, for some people, fruitful retirement, because they want to do things. They want to do different causes. They want to be able to give to charities. They want to be able to give to their grandchildren. They want to be able to travel. They want to be able to have expensive hobbies like golfing, and maybe going to different sporting events throughout the nation and all these different things, but they have no income. So the best of your life should be the blessed of your life, which is primarily in retirement. So I help you retire before you expire. So that's what you desire and what you aspire. We are the ones you hire. Our goal really is to get your bank account on fire with a whole lot of lifetime tax-free retirement income that you will not outlive. I'm Shateka Husser, your favorite retirement consultant and annuities broker, and I am out. God bless.